Is this summer stock market rally just getting started or about to hit a wall? Ryan Detrick, chief market strategist at Carson Group, argues that historical momentum and improving fundamentals could keep the summer rally alive. But with August and September looming, will the rally survive the seasonal slowdown, or is a surprise correction waiting in the wings?
So you look at history, up 25% the last 3 months. So you say to yourself, what does that mean? 5 times in history, we've been up 25% or more in a 3-month period like we're going to be today. Off the 75 lows, off the 82 lows, off of the 2009 lows, 2020 lows, and then 1999 was in there. You look at those 5 times, guys, the stock market did really well 6 months, a year later. I know 99 was kind of late in the cycle, but the reality is this much strength, this quickly, history would say that's a ball under the water. You let it go. There's still momentum, and that's the key word, I think.
And would you say 10 straight Julys? The last 10 years, July has been a positive.
The S&P has been higher 10 straight Julys, which is a little trivia. It's actually the second best month on average. November is up more, but nonetheless, July's up 10 in a row. One more could tie the all-time record. And when you look at kind of all the stuff you've been talking about, the earnings start up soon. Maybe we get better inflation data. We think that this summer rally can continue. We're probably going to have a higher July. Yes, then you have August and September, maybe well-deserved break. But the reality is this is a broad-based global bull market and one that we don't think is slowing down anytime soon.
Better inflation data.
Yeah, and I know a lot of guests come on talking about tariffs, believe me, and trust me, but then let's peel back that onion for a second. Why as every guest probably mentioned for 2 years now, shelter has been very stubborn, rent's been stubborn the last 2 months. That's starting to crack. So maybe you get higher inflation because of tariffs, but the shelter parts may be improving, and maybe they offset each other.
Energy.
Mm-hmm. Yeah, that
energy
could be
offset.
Nice. Mm-hmm. Yeah.
As well. Okay, so we came back 25%, but we were down we were down over 20, right?
Right.
So we're even. Is it a year where we're going to be up double digits?
Mm-hmm. We think so. You know, today the Carson Group is releasing our mid-year outlook, and we think the S&P.
That's today.
Today. How about that? Isn't that neat the way that worked?
And you're here like telling people, or you didn't come just to come on spot? Did you?
No, just kind of randomly worked out that way. But we're here, and we came into this year saying a 12 to 15% total return this year. We never lowered it. A lot of people lowered it and raised it. We've stayed with that the whole time, so we're still there. And we do think, there's still some gains coming. And again, what happened this year? We know the rest of the globe led. The U.S. lagged. We think the U.S. is going to take back the baton and probably do a little better. One more for you. I know the golfers out there, the sweet spot, when you swing and hit it perfectly, that's great. When the S&P is up between 5 and 10% at the middle of the year, like right now, so in this sweet spot, not up a ton, but not doing poorly. The rest of the year is higher 13 out of 15 times with better than average return. So we're in that sweet spot where, again, things are, there's always worries, but things are good.
How do you factor in right now investor sentiment?
Yeah.
ETF inflows are kind of neutral.
Yeah, I think it's the best way to put it, kind of neutral. Yes, there are certain pockets of optimism, but when you look at the big institutions, hedge funds, they have really missed this rally. They're still net short overall. There's some pockets of optimism. We're not seeing huge flows. We know the VIX, but then you've got the little complacency at options market, a little bit. But I'll tell you, when I travel the country and get to present and talk to people, I never get the question, hey, how high is this going to go? How good are things? We're just not seeing that. So big picture, I don't think we're anywhere near a major peak because of market sentiment.
So where were you at the beginning of the year on the S&P?
Yeah, well, we said between 12 and 15% total
what's
return
that come
this
out
year.
to? Right.
That's a very good question. It's another 5 or 6% away from here, 7% away from here.
Right.